So very good morning, very good afternoon, evening to everyone who found the time to join us for another online event of our mobility community as part of our collaboration we have between Chorus and CVA. We kindly ask you before we start the session to mute yourself or even turn off the video or the camera if you are not going to speak today during the session, just to give space and be patient with our speakers that are going to present some of the insights. So the topic for our today's session is powering the future, the impact of the electric vehicles on mobility and finance partnership. Our intention, from the very beginning, is to build a community of financial services executives that are dealing around mobility topic, but expand this to mobility ecosystem of the institution that are very much engaged in the whole mobility space. This community was established in a close collaboration with our partner CVA, who is a global expert on the mobility topic. And if you need, any questions, any help, they are the right people to talk to. So I'm really excited actually to have Marcus and the team engaged, in this project with us. We are serving, a number of topics starting from May all the way, until the end of the year, and then we'll continue obviously in 2024 with a number of other topics. We want to bring the very best insights from the financial services executives, the very best insights from OEMs, distributors, fintechs, and other providers in the ecosystem, just to give a bit more glimpse on what's happening in the industry and what is the future and evolution of mobility ecosystem and the impact on the financial services. So that's shortly just to give you in a nutshell. Happy to have engaged all of you that are right now online, but as well furthermore people in this community. And before any further ado, I think we are good to go shortly to present you what we have ahead for today's session. So please let's have a look at the speakers that we have today and the agenda that we expect. Apologies, we have small technical issues. In the meantime, we'll get back with the presentation. But what we have actually prepared for you is the exciting lineup of speakers that represents different regions of the world and different type of institution. We'll start with Chris Moldrich, representing Commonwealth Bank of Australia. So exciting news and insights coming from a different continent. We'll have insights, from BMW Financial Services, so one of the key player in the global mobility ecosystem. We'll have insights as well from Monta, one of the institution that is right now more expanding globally in their offer and trying to simplify the job for all the OEMs and financial services through the software and IT solutions. And we'll have Stephen, representing Direct Line Group from the UK, one of the distributor who can give a lot more insights on what the insurance and financial services will bring ahead. But before all of that, I want to hand over to Marcus Collet, who represents CVA, one of our key partner for the topic, to give you a bit more insights on what do we mean by the topic today and what are the importance highlights that we want to mention. So Marcus, over to you. Marcus, you're on mute, please, if you can unmute yourself.
It still happens after years of COVID. Sorry for this. So thanks a lot for the introduction, Lukasz, and indeed, so what I try to do now is to give an introduction to the impact of electric vehicle on the automotive space and on financing in 5 minutes, which is going to be a challenge, but I can try. I try to put this up in full view so that we can all see. And I put my little points on. Yeah, so basically the first point talking about EV that needs to be made is that there has been an acceleration of the S-curve. You can see it here in terms of transitioning to EV since 2019-20, which has been strong. And I think the dominant assumption today is that the EV transition is going to happen. There's some remarks about it may not be stopped in 2035. The ICE sales, there may be some e-fuel, but all of this doesn't change that the EV transition is going to happen. And there's going to be a lot of change in the EV transition. So we have here a bit the yin and yang in terms of threat and opportunity. Of course, there's some threats in terms of margin pools in services, so we have here on the left side an estimation of a decrease of 40%. There are some players who say it's less, some say it's going to be more. one thing is sure, it's going to upset a bit the value balance that we currently have in the automotive ICE system. On the right side, you see more the opportunities, and the opportunities actually that compared to the classic vehicle value chain that we had, we now have more value chains. That's obviously an opportunity. We have the energy and the charging value chains, and we also have the battery value chains. And this obviously brings additional opportunities. So this is a bit of a wild slide, but it simply shows a bit estimations of value we have done. And you can see what's blue is new, what's red is decreasing. And you see that basically in terms of the EVs, the value attached to the vehicle management chain is under pressure because of insurance margins, because of service margins. But you can see that globally there are new pools in terms of energy management in the house, in companies with a grid. There are additional margins looking at charging. And obviously there's a new assets which we have, which is the battery, where basically there are some margins to be made. There obviously are also some constraints in terms of recycling. So basically you see there's a real new ecosystem that is emerging, and you see it a bit here. So here you see the new battlefield. Again, it is wild, but this is not our fault. It's more because the context is going to become more complex. And you can see here the different, on the left side, the different domains of energy, of charging, of batteries, electric vehicles, of fleets, and of stations. And you can see on the x-axis the asset value chain in terms of creation, management, operation, and then also the end customer. And you see that in this value chain, there are now a lot of different value models, of different business models that exist and which need to be contemplated by the different players. And we have illustrated actually here for a rental car company where basically the classic business model is the orange one, which is rental and sharing. And you then have here new opportunities in terms of multimodal hubs, in terms of managing the energy and charging for the end customers, and also then having synergies in terms of vehicle to grid integration. So you see that the ecosystem the ecosystems you need to consider and where you need to engage with partners or alone are becoming much richer than before. And this is the last slide. This opens a number of new models. We have illustrated here Octopus, obviously, who pays you £35, or who paid you last time I looked, £35 per month if you connected your car to the wall box. You have smart charging by Good Energy. You have mobility hubs by Shell. You have General Motors actually engaging in energy businesses with utilities. You have Schwarzgruppe in Europe, a retailer, building up a CPO network. And obviously you have BYD engaging in second life, battery life. So obviously what we can see here is that there's not only a question of the EV value chain changing, but it's actually also players in the vehicle value chain that needs now to reach out into adjacent ecosystems. A very exciting story. Okay, back to Lukáš.
Thank you so much, Markus. I think it gives a bit glimpse on what's happening right now in the EV ecosystem, and how important and what are the opportunities there for all the financial services organization, but as well beyond that, the partnership that they can create. Let's right now start with a short engaging of all of you who joined us actually for the session. So we have prepared for you 2 poll questions. Let's join on the slide. You can find it right on the top of your settings, of Teams application, or by scanning the QR code that you see in front of you. We have a very simple question, just to engage all of you in the very beginning. So how much do financial services players need to adjust their offering and business models to EVs? And there are 3 simple options. You can pick, one of them: minor, so no adjustments needed at this stage; relevant, will require business adjustments; or major, need to rethink our offers and profitability. So these are, the 3 options. We have, still
actually participants. It's disruptive at the bottom. Sorry, Lukáš. So if you scroll down, there are actually 4 different options.
There is disruptive, of course. Yeah, we have to take into consideration the fintechs and everything, what's happening beyond just the financial services industry, because the disruption is many times these days, especially coming outside from the traditional players. So that's the option as well. So please, pick one of those. We have already 20 responses coming, out of all people we have online. Let's give it, 30 more seconds before we close it. But it's a good try, because we will have, another poll question later on running during the session. So we can test it with the first question and then be ready for the second one. So I believe we are good to show you the results. At least, what's the perception of the group that we have here online. But I believe, it represents already a sample that is globally well adjusted and understood, among all the financial services organization. So Marcus, what's your view on this one?
Yeah, it means that most of the answers are major and disruptive. I mean, no one thinks that it's going to be minor. So things are going to happen. Now we have a third who think it's not going to be major and disruptive. And then obviously you have half it's going to be major. Actually, only minority that is going to disruptive. And obviously, that's really the question, what disruptive means. And indeed, today, it's probably still too early that you have disruption, because EVs are still part only of the overall pool being managed by the players. So I think major is already a good indication of the fact that important things, significant things are going to come up. So not astonished about the results.
But this is important as well, to know that people are or they have a good self-reflection, that none of the financial services organization believe that they are ready to go. They're ready to be here, in this ecosystem. So good. We are here to learn. We are here to listen to some of the experts and insights. So let's go to the first one. We have prepared, as we mentioned in the beginning, for you an exciting story from Commonwealth Bank of Australia. Obviously, as Chris mentioned in the beginning, there's a lot as well that they have to take on the journey, and they are ready to learn as well from all of you. But I believe, this might be exciting insights to bring as well, for European, US, or as well, African, Middle East market from Australia. So Chris, over to you. Looking forward to some of the insights that Commonwealth Bank.
That's great. Thank you. Thank you very much, Lucas. So appreciate the warm introduction, and good evening, morning to everyone that's on the call. So my name is Chris Moldridge. I'm the General Manager of Asset Finance for the Commonwealth Bank here in Australia. I have the privilege of leading the end-to-end asset finance business within Australia that supports our business customers with asset finance. So that's everything from our contact centres to our operations decisioning teams, product, technology, distribution, which is particularly exciting. In terms of what I thought I'd cover today, there are really three key things. I think one, just a quick overview of Commonwealth Bank, or CBA as it's affectionately known as, which is a little bit funny given the CBA in the discussion earlier. I thought I'd talk through what's happening in the electric vehicle market here in Australia, and how we as a financial institution are supporting the transition, particularly interesting given the poll that was just taken. And then I think thirdly, what we're seeing in the Australian market and some of the challenges we face here in Australia, just given the Australian geographical spread. So just a little bit of background. As you see in there, Commonwealth Bank was founded in 1911. We're now a broader team of 48,000 employees across the country. We are headquartered in Australia, so I'm currently in Sydney at the moment, but we have offices, branches, etc., across the country in Australia. We do have a presence, or a broader presence, across Asia, Europe, New Zealand, North America, and the United Kingdom, as it mentions there. We do serve 15.9 million customers, which is significant for Australia given the size of our population, and that's with a full range of financial services, both to consumer as well as small business, corporates, institutional, and government. So everything from personal lending to home loans, personal transactional accounts, and certainly then on the business side, business transactional merchants, etc. Pleasingly, in terms of the business I have the privilege of leading, on the vehicle and equipment finance solutions, the Commonwealth Bank is ranked #1 in Australia for brand and market share in the asset finance space, according to Eastern Partners survey that came out just recently. So really privileged position to lead the team. I'll just go to the next slide. So this is quite a busy slide to walk through. So I'll walk through some of the numbers that you're seeing on screen. Starting kind of at the top left-hand side, we are seeing an increase in electric vehicle market share in Australia, which now sits at 8%. Both petrol and diesel volumes are down, which has given rise to the increase in electric vehicles. To give you a sense of the movement, electric vehicles in Australia are up 200% or over 200% year to date compared to the same time last year. So we really are seeing an over-index in the move of Australians to electric vehicles. In terms of some of the registrations that we're seeing, Australian buyers are twice as likely to order an electric SUV compared to an electric passenger vehicle. And the reason I call that out is Australians absolutely love their SUVs, and they love them just as much as they do utility vehicles, or utes, as we affectionately refer to them in Australia. Unfortunately, in the Australian market, there isn't an electric ute or a utility vehicle here just as yet, but that is expected to come into the market next year. Again, just to double down on Australians' love of SUVs, the total SUVs registered year to date in 2023 or this year was just under 45,000 compared to just under 21,000 for passenger vehicles. So quite a stark difference. As you can see in the bottom right, Australia does lag the global countries, particularly across Europe, in terms of the EV uptake. I referenced 8%, and whilst that's been quite a sharp increase, clearly there's a gap and an opportunity for us to start to get back in line with some of the European markets. Next slide, please, Mirka. I thought I'd use the opportunity to touch on the geographical size of Australia, as this does create some challenges for the country in moving towards being fully electric. As an example, I think some of the people on the call are in France today. Australia is 14 times the land mass of France, which is not insignificant, particularly when we talk about charging infrastructure and the move to electric. There's certainly a heightened level of what we refer to as range anxiety with respect to just individual distances that are travelled with electric vehicles. There's probably more a perception, certainly, rather than a reality. But what you're seeing on the screen is we do have 3,700 public chargers across the country as it stands today, and that's across 2,100 locations, again, across Australia. We do need more continued public sector investment into charging infrastructure, particularly in regional locations. So there's still some work to be done there. The EV usage is certainly growing strongly, I think, as the market continues to mature, and certainly as it becomes more affordable. There's certainly been a lot of help from government in terms of concessions, and then equally in terms of manufacturers expanding the choice of vehicles beyond luxury models that are available in the market. Given the geographical spread that you can see on the screen, we also need, as a country, to keep close to what's happening more broadly or in more progressive markets. I think some of what was touched on just before by Marcus is really interesting in terms of second use of batteries, etc. So I think for us to continue to lift the 8% that I referenced, I think it's important that we are staying close to broader markets, particularly what's happening in Europe. Just moving to the next page. One of the pleasing things is it is expected that battery and electric vehicles and plug-in hybrid electric vehicles will reach cost parity with internal combustion engine or ICE vehicles by 2025. At which point, for Australians, I think an electric vehicle certainly becomes the most logical option. I think this is really positive news for Australians that are looking to make the switch to electric, as there is cost differential, obviously, between a lot of electric vehicles and ICE vehicles as exist today. And I think that plays into some of the consumers' and businesses' choice around whether they move to electric or not. And I'll touch on in a little while what the Commonwealth Bank is doing to support that. And just moving to the next slide, again, for me, one of the things I'm particularly passionate about in my role and where I see a huge opportunity in Australia is for Australian businesses to play an outsized role in the transition to electric across the country. Just under 15% of businesses currently use electric or hybrid vehicles, We do a lot of market research with our business customers on what they're seeing, what their buying intentions are, particularly in the transition to electric, both across vehicles, but also on battery and solar. Really pleasingly, 25% of business customers plan to use electric or hybrid vehicles in the next 6 to 12 months. In all of the market research we've been doing, that's the highest I've ever seen that. Equally pleasing is 45% of businesses are planning to use electric vehicles or hybrid vehicles in their business in the next 12 months plus. So really seeing quite a stark move in businesses looking to make the transition to electric or hybrid. Just on the next page, you'll see one of the things that's come through really strongly in the research of business customers when they are thinking about taking up vehicle finance is that 77% of businesses see discounts as being the most desirable feature for vehicle finance. We've certainly taken that into consideration at the Commonwealth Bank in terms of supporting the customers in the transition to electric. I think that's one of the things that's been really important is as customers are transitioning, how do we make it more affordable for them to make the move? So I might just lastly on the following page talk to some of what we have done at Commonwealth Bank and within the business or within my business to help customers that are looking to make the transition to green. We previously had our energy efficient finance offering. Earlier this year, we explicitly separated out green asset finance to help customers that are making the transition to green or to electric. So we do provide a 1% discount off our standard rates for customers that are looking to move to electric or hydrogen cars. Again, the intention behind that is to try and make it more cost affordable for businesses that are looking to make the transition or upgrade from petrol or diesel vehicle. We are also trying to make it easier for customers to gain access to finance, particularly those that have a solid 12 months of good repayment history. We are also helping support customers that are looking to create their own sustainable energy with solar battery packages, where we are also providing discounts, as you can see on the screen. I'm conscious I haven't touched on commercial vehicles. We still do need further investment into commercial models. There are more electric light trucks that we're starting to see come into the market and vans. As I mentioned earlier, there's no real commercial solution for utes as yet. They're very excited about the possibility of that hitting the Australian market over the next 12 months. So look, just lastly to summarise, really appreciate the opportunity to come along today. Hopefully there's a few takeouts for you in it. I think firstly, hopefully you've learned a little more about the Australian geographical spread and what I see is the opportunities to overcome some of the challenges that presents. I think secondly, just the overarching Australian market with the continued acceleration of electric vehicle growth, which I'm particularly excited about. I do look forward to seeing us alongside some of the other European nations that were referenced earlier. And I think lastly, hopefully it's given you a sense of what we're doing, certainly from a financial institution point of view and the Commonwealth Bank's point of view to support investments for Australian businesses, who I really do see as having an opportunity to play an outsized role in the transition to electric. So thank you. I certainly hope that was informative.
Thank you so much, Chris, for the insights. Definitely very informative, especially considering the geographical spread of Australia as a continent. Quick question: what do you see as the key challenges or even the opportunities in EV for a financial service organization, even for Commonwealth Bank?
So I think the key opportunities I really see is just to support customers with the transition. I mean, I think we put in things like green asset finance to really help customers move there early. I think the more and more we can share awareness and share what's available to customers to help make the transition, I see as an opportunity. I think also the government, Australian government, both at a state and federal level, has put out a number of incentives to help support customers move towards electric. And so I think we see it as an opportunity to help raise awareness for customers, both business and personal, on what's available to them to help the transition to electric. I think the more awareness around that, the more I think it'll help from an affordability point of view.
In terms of challenges, especially considering that Australia is kind of, distant, from many of the partnerships and many of OEMs?
Yeah, I mean, I think that's certainly, I mean, that was a particular challenge during COVID, right? I think, we saw our supply times, I'm sure it would have been lengthened in other countries, but certainly given the tyranny of distance to get to Australia, it's a long way. And so I think we certainly saw the supply of vehicles really stretch out. We definitely saw that on the electric front, although really pleasingly, we've seen that rein in quite considerably. It still can take quite a number of months to get a vehicle landed. In some instances, even for hybrids, it's 18 months or so. So that still represents a challenge for us. But I think customers are working through that. We're seeing more manufacturers come to the country. We are seeing improvement in stock and flow coming in. So I'm hoping that's just a timing issue.
Good. Thank you so much, Chris. Marcus, is there any question from your side? You are on mute again.
Yeah, okay. So obviously amazed by the geography. So actually you can have reach anxiety also with an ICE vehicle.
Yeah, you can. You absolutely can.
So the question would be, I mean, Commonwealth Bank of Australia, does that also take you to change the products for financing? Because I guess you also come more from a credit and finance lease history. Doesn't that take you also to go more into operating lease, because people will be, wary about the asset itself because of all of the technology change and so on? Is that changing your offer structure?
So fortunately in my business, I look after both kind of equipment financing for business as well as novated leasing. I think we have seen certainly a high uptake in leasing, although some of that pertains to government government incentives, etc. I do think there's some concerns for some customers around some of the life of the batteries on electric vehicles. Some look at the 8 years and say, well, what happens then? It was a funny discussion with a customer the other day that said, well, at one point in time we transitioned from horses to cars and we made it through that okay. And so I think I think that's absolutely a challenge or something that's front of mind for certainly for customers and also when we're providing finance. But I do think that's just a timing thing as we get more used to the real life of the assets, also to other options, and the more in market where you may be bringing down the cost of batteries, some of the parts. Personally, I feel like that's just a timing thing.
Okay. Good.
Thank you so much, Chris. There is a quick question, just from the audience, if I understood it, correctly. Is, the investment in EV the preference of government-driven, or is it coming, from government? Is it a more regulatory concept or CPAs? Because, obviously there's no good payment history many times. So what is the case?
So both. So as an organization, financial institution, you can go to our website and see our aspirations in terms of reducing impact on climate. And so as an organization, we really see ourselves as playing a critical role in helping customers to transition to green and to electric, which is why we offer things like the green asset finance discounts, etc. There's certainly a lot being driven from government in helping that transition as well. So we see that come through as incentives to both individuals, business, etc., to make that transition. So I would say it's both.
Thank you so much, Chris. Great, as well, having a question, from the audience. If there are any further questions, to Chris, feel free, to write them in chat.
Yeah.
I'm sure that Chris will be happy, to answer them directly in the chat during the session. At the same time, let's go to the next speaker. Marcus, over to you.
Yes. Okay. Thanks a lot, Lukasz. Now I have my microphone open for once. So Stefan, thanks a lot for being here. Obviously, looking at the enormous impact of EVs, it is interesting to listen to the views of a captive belonging to an OEM on how this is going to change things, because obviously captive has a specific role in all of this, especially BMW Financial Services with a balance sheet of a whopping 150 billion, which is sizable, supporting also revenues of your OEM of 72 billion euros. So definitely you do play a role in how this ecosystem is being shaped. Now, BMW is also doubling its EV sales again in the third quarter of 2023. So it shows that obviously you are also accelerating a lot of EV. So perhaps it could be a good way to start this off by telling us what EV actually means for BMW Financial Services.
Well, thanks, Marcus, for the nice introduction. As mentioned, let me just try to share my slides quickly here.
Yeah, coming up.
Is coming up. I just need to move you a little bit to go into the presentation mode. Just a little slow because the slides are very heavy. Come on, here we go. All right, so you're good now, right? So, well, yes, I think the BMW Group has long back already decided to go into EV vehicles. Actually, the first electric vehicle was built in 1972. And was leading the marathon at the Munich Olympics at that time. So, you know, way back where nobody actually thought around electrical vehicles, but there was a major program which was called the Project I, already back in 2007, which came up with the i3 and the i8, which was launched in 2013 at that time. Probably before a customer was ready really to drive electric vehicles on a broader scale, but the car was pretty much sold until 2020, and the numbers you see on the left here, 18, 19, 20, was basically the i3 sales we had at that time. And after that, with additional models coming in, the volume has been doubled every year. And again, this year, the milestone is to do 15% of the total sales from fully electric vehicles. Now, how's the way forward? Obviously, I think the group has been committed now to really go full electric, with always leaving doors open for also other drivetrain alternatives, specifically hydrogen. But the target is by 2030 to sell 50% of global sales with all battery electric vehicles. And in the lineup today, we already have pretty much in every segment a car available. The latest edition has now been the i5, which completes the 5 Series program. And yeah, more and more will come out. But the big wave will come with the so-called Neue Klasse. Not sure if you heard about that, which is going to be the new platform for all electric vehicles, where all the future cars will be placed on. Yeah, it's a huge investment from the group in order also to completely change, you know, the architecture of electric drivetrains, the way how batteries are handled, and also the tech stack. And it'll have a big difference in terms of basically how we're going to sell the cars in the future. So far, from all the way back, you know, more than 100 years by now, we've been very much known all the time that we are very flexible in terms of being able to configure cars. You know, so if a plant is producing 500,000 cars a year, I think there's not a single car which is identical to the other one. Which means there's a high amount of options available for accessories and colors and whatsoever. And the Neue Klasse will make a huge change in that pretty much all the cars which are going to be built here are going to be fully loaded. And you know, a user can more and more activate certain features of the car with functions on demand. Which obviously will be a change for us if you talk into the finance perspective that, you know, what are you actually funding at the end of the day? Are you funding, you know, the bare basics, or are you also funding some of the additional features in terms of whatever a customer might activate? Over to you, Marcus.
Yeah, so indeed, a lot of change even to the structure of the assets. So that's quite amazing. Now, the question obviously here would be, as a captive, how does that change your life, and what are your challenges managing all of this?
Well, at the end of the day, I think it was already mentioned by CBA to a certain extent. we need to look into certain pain points which customers might have when it comes to a switch to an electric vehicle. And the foremost pain point is obviously the charging. So I think that's where everyone is mostly concerned about. Can I access charge point? What's the rate I pay at the charge points? Are charge points available, and so on. The second one is obviously already mentioned by you before, Marcus, is that customers ask for more flexibility. They might want to test an electric vehicle for, let's say, 6 months or something like that, and see if that suits their mobility behavior. And if not, might have an option to go back into a conventional ICE vehicle if it doesn't work out. So I think there is, in addition to what you mentioned before, that people are concerned around the lifetime of the battery, although from an OEM perspective, we don't see really an issue in that, but the perception is out there. Definitely the need for more flexibility in the financial services offerings.
Okay, so quite a few changes that you have put here also on the slide now. What does it mean specifically concerning the asset? Because indeed, the evolution shows that financing, which has been credit before, goes more and more into asset finance, where the asset is an important part of the equation. How do you actually manage the assets in all of this?
Yeah, so I think the key here is to mitigate the risks around the residual values, because I'd say with the big transition from ICE to BEV, you can say a car is a car, which is to a certain extent very much true, but there will be differences, specifically when newer technological quantum leaps will come out with battery technology in terms of managing residual values of the cars. So you need a strategy in terms of how to deal with that. And the way most of the OEMs are looking at it, it's not just what we're also thinking of, is bringing in additional ways we can actually mitigate the risk for residual values. It could be that we pack the cars after a leasing cycle into a second usage model. Maybe a second lease, which goes to a much longer kind of duration, up to 7-8 years, which is not something of what is typically being offered today. Or also putting cars when they're not good to sell out on the market into rental fleets and offering different mobility packages in order to utilize the car. So I think those are, I'd say, the biggest headaches of what all the, I would say, leasing companies, and specifically in Europe, where leasing is very, very strong, need to get their head around. How to stay also very competitive from an offering, and mitigating the risk which is included in a competitive offering at the end of the day.
Yeah. And indeed, Stefan, it's true that you only have a residual value risk if you sell the vehicle in the
exactly.
end. But does that mean that basically also the OEM needs to increase the control of the asset cradle to grave? Isn't that an evolution we see?
I mean, that comes on top, although I think there is not really the magic button hasn't been found yet. Because obviously, if you think in terms of becoming a complete sustainable provider, there's more and more discussions also from regulators or with regulators that OEMs will need to take cars back and also recycle, specifically the batteries, which have obviously a great deal of material in them, which can be very valuable, specifically in a European environment where Europe doesn't really have access to these raw materials as other geo-regions around the world. So there's been some talk around the European community actually to force OEMs to take back the vehicles at the end of the life, and so that the battery raw materials are not exported into outside Europe anymore. So I think that'll be a topic which we will have to keep our heads around for the next years, how to do that. Obviously, there's still a way to go because typically cars run, let's say, 14 years. Depends on the mileage they do, obviously. And if we go into a second leasing cycle, there's still a little bit of a bridge way to look into. But there is discussions going on just basically not selling the cars anymore, just keeping them basically as the assets within the ecosystem of an OEM, so that we can get the hands on the cars when it comes to more scrapping and recycling.
Indeed, so there's a need to better control. Doesn't that also coincide with the plans of BMW to go towards an agent model? Because the current plans, I think, that have been published last week, is that you will flip Mini starting 2024 in Italy, Poland, and Sweden. The BMW brand in 2026. So going towards this agent model, doesn't that also bring new challenges for the captive?
Obviously, I mean, I think to a certain extent, I think for captives, it can also be an opportunity. So because obviously our main acquisition channel today is clearly the dealers or agents, and I think to a certain extent this will be the case in the future as well. But if you remember what I said with the Neue Klasse in terms of how the cars are sold, we think a lot of more cars are going to be sold online, specifically with these kind of features. And a prerequisite in order to do that is a direct sales model, because you need to control the pricing of the cars. If you can't do that, nobody will buy a car online, because everybody thinks he'll get a better deal when he goes to a dealership. And I think Tesla has shown that this can be done very, very successfully. And I think from a financial services perspective, this actually gives opportunities, because at the end of the day, what the customer will buy is not just simply the car. He will buy typically a mobility package, which obviously needs to be bundled then with the car in order to do that. But for us, obviously, it's a huge challenge, because we need to adapt systems, develop systems in order to offer these products much more simply as they're offered today. I think Chris mentioned that from CBA as well, that there's a lot of structuring in the products already today in order to make, I would say, leasing or also the loans attractive for customers, typically in a total cost of ownership perspective. And overall, that needs to be simplified in order to cater for the online perspective.
So really a lot of disruption on the way that's going to come up now.
Absolutely.
Thinking about the audience, what would be, and that's my last question, what would be your advice to banks and insurers who want to support OEMs in those tremendous challenges that you have just outlined?
Well, I'd say, we think very much that we won't be able to do all these things by our own. We need a service provider who can help with charging insurance, with other services, with tires, and so on. So I think there's a high chance to integrate into an ecosystem. And if you think around insurance, I think when you talk more in terms of providing mobility packages, a big question mark is always the insurance package. And how can you sell something online if you don't know what kind of a claims discount your customer will have, or you have a complicated process in order to assess it? So I see a big chance for pay-as-you-drive kind of insurance packages, where it doesn't really matter what's the history of what the person has been driven. It's more of what the person is going to do with the car, which he's going to take over. And I think that is a huge change, which I think will be coming up. And it will not be the same for all the countries. In certain countries, people will be more likely to accept such an offer than in other markets. But there's already players out there who've proven that this can be very successful.
Okay, great. Thanks a lot, Stefan, for these insights coming directly from the head of strategy of BMW Financial Services. Really, really interesting. And it shows that EV changes the name of the game. and obviously everyone who wants to partner with an OEM needs to understand where this game is going to. So really super. Thanks a lot again for those super interesting insights. Lukasz, back to you.
Thank you, Markus. Thank you, Stefan. Definitely, a lot to think of, about the strategy and how it is going to impact the financial service industry. We have a number of questions, in the chat. Now, I'll leave it, Stefan, up to you. If you would like, if you'd be happy, and open to answer them. So please, if you can have a look, at the chat and directly probably answer some of them. that'd be fantastic. But you can, directly answer them in the chat. So we leave that, at the time to continue with the other speakers at the same time. So before we go to the next speaker, we obviously want you to be more active, during this session, as I mentioned, not just sit and listen, but to really contribute, from your angle. So we have a slide to question number 2. Again, in your setting panel up the screen, or directly, by checking the QR code, you have in front of you a question with multiple choices this time. So where do you see opportunities for you to tap in? Now we talk mainly about FSI industry, but obviously all other providers. We have here 4 options this time, 5 options. Sorry, I'm not going to miss any of them. Higher penetration, more expensive assets. The second one, additional end customer services, so wall boxes, charging, additional partner services, so data management, analysis, and so on. New value pools, state of health, recycling, or revolutionary offers, 10-year leases, EV, ICE mobility mix, so and so on. So please, cast your vote and your preferences. As I mentioned, this is multiple choices question. Markus, you want to add anything?
No, I'm just seeing this evolve, and so perhaps I can comment this already now. So what's interesting is that the pole position is the additional services. So for partners and end customers, that's interesting. Also for partners, because obviously, as Stefan said, no one will be able to do all of this alone. So the question is how you can work together with others, how you can give new service offers also to partners, and then otherwise, what's also interesting is that actually not a lot rely on higher penetration and more expensive assets, which I think is interesting because it means that no one thinks that simply remaining on the flow is good enough, but there really is a need to position differently. So I think this again is highly interesting in terms of responses.
Let's wait for a couple of more responses. In the meantime, Stefan, there's a quick question whether there is any cooperation with fintechs, financial services providers.
I'm actually just reading through. Yes, we're actually talking to fintechs in terms of always screening certain fields. It's called the Innovation Garage. And there is chances of getting in touch with us if you have great ideas in terms of making certain things happen. Obviously, there is a program within the BMW Group. Actually, it's not just a financial services problem. It's called the Innovation Garage, if I'm correct. Exactly. Yeah.
Wonderful. Let's have a look at the result, of the poll.
Yes, coming up now.
So, Markus, your views?
Yeah, so it's a bit, the pole position is everything that in new services, obviously, as indicated before, directly for the end customer, but also partner services. So that's interesting. And again, high penetration and more expensive assets. Few people are relying on the tides, improving the situation for everyone, but everyone needs to rethink the position of the value chain. Interesting.
Yeah, so you see, you have picked the option that everyone preferred almost. Yeah, so next time need to differentiate them a lot more. Anyway, thank you so much, for a contribution. Let's go to the next speaker. Let's have, a slightly different angle. We have Kevin Spangenberg representing Monta, who is one of the platform and software platform, powering the entire EV charging ecosystems. So I think, wonderful example of one of the institutions that is right now expanding globally, creating a number of partnerships and delivering the value to the end customers. So Kevin, over to you. Looking forward to some of the insights that you are going to present.
Thank you, Lukasz. Good morning, everybody. Am I on? Lukasz, are we good? And then I need to put up my presentation here. And
you can see well. All good.
You can see the presentation. You can see.
Yeah.
Okay, great. So, good morning, everybody. My name is Kevin Spangenberg. As Lukasz mentioned, I am the expansion manager at Monta. And real quick, I actually worked for Chorus a couple of years back, so this is a homecoming of sorts. Back then it was called EFMA. I worked there for 2.5 years, so it's kind of nice to come back after I decided to go industry side, I suppose. So now I'm located in Copenhagen, and we're not exactly a bank here, so we're not a financial services provider, but I'll actually get into the types of financial services that we do provide and why financial services tools in a modern financial tech stack is so crucial to EV charging, right? So Monta, we are a charge point management system, and we are a software platform that we're trying to connect the dots to accelerate the adoption of EV charging. And we do that through 2 tools primarily. One is our application, our B2C. This is the app that a driver uses to initiate a charge at a charging point. And then we also have our hub, or what we call our portal, and that is used by anybody who is managing a network of charge points, whether it's 10 charge points, whether it's 100, whether it's thousands of charging points. We provide a management system that enables them to set access, decide the payments, continue to expand, manage their installment jobs and everything. There's quite a bit that goes into building out networks of charging stations. So those are kind of the 2 core primary tools. We sell, our revenue comes from B2B sales, basically. We're selling to the parking garage company. We are selling to CPOs. We're selling to utility companies. We're selling to hardware manufacturers. Anybody who is managing a network of charging stations, we want that connected to Monta. That is our ambition. So what we call solution providers. So that's CPOs, that's installers, that's utility companies. They are our partners, the solution providers. They then take our software and they then go and install charge points in all variety of contexts. And so that can be residential homes, that can be single family homes, that can be multi-unit dwellings. And then there's what we classify as the business settings. That's hotels, workplaces, malls, parking garages, you name it. And then there's kind of this the destination public charging. That's at gas stations, that's at rest stops. That's that high-powered DC charging that everybody kind of gets a lot of the attention, because that's the high-power fast charging that we all think is necessary to kind of emulate the current fueling experience that most people are accustomed to, right? You pull up to a petrol station and you refill in 5 minutes. So that's kind of what that high power charging is set out to do. So there's charge points at all those different sites. And then at the end of the chain is obviously the EV driver who's charging the car, who's charging their vehicle. But this quickly becomes pretty complex. As you can see, this is just a potential little flow, but you have that solution provider. They have different teams, what we call teams, or different sites, and each site might have 4 or 5 or 10 charging points. And then there's drivers that are coming in that are maybe have a relationship with that team or that site, or maybe it's a totally random person who's just stopping through while they're driving to a different location. The amount of transactions that are taking place here make it pretty complex. And so what a lot of our competitors have kind of decided to do is offer up just the management system. All right, you can connect the charging point to the management system and you can manage it. And then what they do is they decide to kind of just do a monthly invoice. We're going to keep a running tally throughout the month of how many charges take place. And then we will take it in, and then we're going to invoice you, the charge point operator, at the end of the month. It's pretty classic. It's a common billing. We're all pretty accustomed to monthly invoicing. At Monta, we decided to go a different route. And this decision was made before I joined a few years back when the company, we're only a 3-year-old company. And there was a decision made to go the the digital wallet route. So talk about Monta Financial Services. It's simple, but it's a wallet. And we kind of chose, we can all are familiar with digital wallets, I think, right? With Uber or various online platforms, you can upload cash, you can upload money into a digital wallet, and then you use that to pay for services. We decided to go that route, and that has been both a positive and a negative. It's a positive in the kind of like forward thinking, the kind of the comprehensive toolkit that we're able to provide to these CPOs. If they want to offer Apple Pay or Google Pay or something like that, we have that. Some of our competitors have it, but many of our competitors don't have it. We enable the CPO, the owner of the charge point, to pull out their money very quickly each month with Wise, and they're able to use able to just access their digital wallet. They're able to track transaction by transaction the amount of the amount of kilowatt hours that are charged, and then the payments that are coming in. And then when they want their money, they can pull it out, no problem. They can just initiate it themselves from the portal. We brought in, but to run this digital wallet, it requires a very modern kind of financial tech stack. So instead of just doing this classic invoicing, we decided to go the route of the wallet, and that means we brought in Stripe right away. So Stripe is how we accept all the payments. Then we brought in Adyen, and that enables us to bring new methods of payment, right? So we're expanding quite quickly. And as we know, each country in Europe and all around the world kind of has their own kind of country-specific payment methods that people like to use. Here in Denmark, it's called MobilePay. In Norway, it's Vipps. In Switzerland, it's Twint. I forget the one in Spain. You say maybe Lydia in France, although I don't know how often people are using that to pay. It'd be Venmo in the US, but that has provided, kind of been a nice way to quickly bring on board new payment. That's, we go in and it's integrated already, and you can toggle it on for a new market and provide a better user experience in that market, right? It's Wise, so we hold all of our money at our banks and classic banks in Nordea and HSBC. And then when you are an operator in France and you want to pull your money out at the end of the month, it's a Wise transfer from our Danish bank account to your French bank account. And then there's obviously new regulation as the European Union is trying to kind of get their arms around everything. Previously, it was a directive, and then there was actually a regulation that was passed earlier this year called AFIR. And one of the elements of that legislation was that all charging points over 50 kilowatt hours in the coming years need to have payment terminals. The idea is that this opens up accessibility for up until this point. Largely speaking, it's been QR codes or RFID cards that are used to initiate the charge and pay for the charge. But starting next year, those will need to have payment terminals. So now you need to integrate that system with all these new payment terminals. So we've already integrated with a company called Payter, which is one of the biggest provider of payment terminals, but there's many more on the way. But then obviously who pays for that installation, right? So that's a big burden that it's putting on these public CPOs to now go and install payment terminals. I'm not totally sure the exact rule in retrofitting. I think they have a certain grace period in order to retrofit. But if you already have thousands of charge points out there in the public, it's quite a big lift to then go and install payment terminals, and then you'd actually need to send an installer to physically attach a payment terminal to the payments and everything. So to the charge points. And so this wallet infrastructure that we've built is kind of the foundation of our platform, and allows for a lot more flexibility, but also then a lot more complications. So we actually are ending up becoming a fintech, and so we weren't a fintech. We're kind of just a software company, but due to the amount of transactions and the flow of the wallet and everything, we have quite a bit of money and transactions flowing through everything through our platform, and it's not just an invoice at the end of the month. So we currently operate under a limited range exemption from the PSD2 requirements because we're just doing electricity, but we've now reached such a size that we're actually going to need an e-money license, and we'll start that application next year. So we started as a charging company, but we'll actually become, pretty quickly, we're becoming a financial services provider as well. So we've had to kind of build out that team and that expertise, and we've hired a VP of financial services who probably would be more qualified to speak with you all about this. But I think back to what kind of think, Marcus, you were talking about at the beginning, this transition to electric vehicles that we're seeing happening at various speeds, a little slower maybe in Australia, right, Chris? It's slower in my home country of America, but here in Europe is where it's really taking off, and obviously it's already taken off in China as well. But it's the way that we're fueling vehicles with electricity is just dramatically changing. And so it's happening at so many different places. It's at the home. It's 80 to 90% of the charging will still take place at the home, but there's going to be still a room and a space for a lot of public charging. I do think there will be many, many more chargers at workplaces. Chris, you're talking about, financing business vehicles. Well, there's many countries in Europe that I was in Belgium a couple of months ago. I think 95% of the EVs in Belgium are company cars. So their policymakers realized that if they wanted to, the real lever to kind of incentivize and promote EV adoption there was to give businesses, tax breaks and fuel breaks and everything. So it's still developing a little bit different in each country, but you're going to see just kind of a totally, there's going to be charging happening everywhere. There's going to be if it's going to be charging happening everywhere. There's going to be just different ways of fueling, but ultimately it is all still going to go through a charge point. So our goal is to kind of bring more of those charging assets to our platform. That opens up new opportunities. Here in Denmark and Sweden, we're able to participate in flexible electricity markets because we now have a certain amount of connected assets and kilowatt hours and megawatt hours. We can then participate in the electricity, the wholesale electricity market. So that's kind of a cool new business opportunity. So you just see the way it's really changing, and it's just moving away dramatically from the simple fuel stop at the petrol station once or twice a week, and moving towards a totally different kind of paradigm that I think we're all still kind of getting used to, and it's not fully here yet, definitely, but we're trying to kind of become that software layer involved in so many of those charging instances. And obviously those charging instances, there's going to be payments. There's going to be, those are transactions. Someone's got to pay for them. Those are, the electricity is not going to be free in communities or in cities or anything like that. So we believe that we're kind of laying the foundation with our tech stack, our finance tech stack, to kind of provide the most flexibility for all of the players involved in this refueling and in the refueling of the future. And that's kind of why we've built it now instead of going the monthly invoicing route and keeping things kind of really, we think that's a bit slower, and that doesn't provide for more adaptability or flexibility for us or for our customers. And I'll just kind of end with, I work on an expansion throughout Europe and then next year America, but obviously you have geographic concerns as well. Like I mentioned, it's developing differently. You need a VAT. You need a VAT number in every country, right? You got to pay your taxes for everything that's going on, right? So we've had a software company that's helping us acquire VAT numbers quickly so that we can make sure we're paying the right taxes. You talk about different data and regulatory reporting elements in different countries. France has something called Advenir, governments, because this is very crucial infrastructure, governments are not just going to let the charging scene unfold without getting their regulatory arms around it and wanting to make sure that it's reliable and meeting the needs of their voters, I guess, in their communities and cities and countries. So we have to keep, we think we've laid a strong foundation for continued expansion throughout Europe, thanks to kind of our financial tools and obviously our good platform that connects and reliably connects charging points. And we believe we want to be that part of that software layer that's kind of sitting in there, in the future. So thank you, Lucas. Thank you, everybody.
Kevin, fantastic insight. Thank you so much for presenting, the Monta story, and especially, the drive and the change you're making, from being just a software developer all the way to fintech that might, very soon even, change the perspective of the market. I want to, appreciate Stefan, who is really actively responding to the question in the chat. This is fantastic. This is exactly why we build the community, to connect people, to exchange the ideas during the session. So please do the same with Kevin. If you have, any questions, shoot them, in the chat directly to Kevin. I'm sure that Kevin is open, to explore different collaboration opportunities, even in Australia. Yeah, Chris. it might be an option. Why not? Since Kevin is leading the business development in the US and Canada.
Oh, I've had a few conversations in Australia, right? But then there's one that it's just they have a different bank code, like basic pieces, like they have different banking code. They don't use IBAN in Australia, right? It's BSB, and right. And so then we're going into the US, and we need to adapt for the bank codes over there. They have sales tax. They don't have VAT in America. They have is it goods and services tax in Australia? So it's just getting those like little pieces right for all these transactions and getting them all in place to kind of handle this everywhere. Because you can connect the charger anywhere. It works. You can do that anywhere. Chris could do it right now and connect it to Monta. But then you actually, okay, if you want to accept the payments and you start to get into that, it becomes quite a bit more complex.
Good. So we have already, a connection member to member CBA, yeah, to Monta. So please, after the call, make sure you have your chat and follow up, to create opportunities. Stephen, let's go straight to you. We have a slight delay with the time, but having so much and so depth, inside deserve this session to be slightly prolonged. So Stephen, over to you, representing Direct Line Group, one of the biggest insurer in UK, and looking forward, to hear an insurance perspective on the topic.
Great, thanks, Lucas. Hi, everybody. Yep, so I'm Steve Williams, Head of EV Strategy at the Direct Line Group. We're one of the biggest insurance groups in the UK with 10,000 staff. We insure nearly 4 million UK drivers, and we do that via a number of brands, including Direct Line, Churchill, and Green Flag. And my role within the group is to understand how electrification of mobility is going to impact our businesses and what we need to do to evolve our products and services to support customers making that transition from an ICE vehicle into an electrified vehicle. So I thought I'd start today with just giving you a brief summary of what's happening in the UK market. So at the moment, as of end of Q1, the UK government confirmed that of the 33 million cars on UK roads, only around just over 3.5% at 1.2 million of those are plug-in. But the expectation is that by the time we reach 2030, that number will be more like 8 to 10 million. So we know and have certainty that that number is going to grow rapidly, and therefore electrification of mobility is going to happen regardless of what you may hear in the news, which brings me on to the recent announcement by our Prime Minister, Rishi Sunak, who pushed the delay on banning of ICE vehicle sales from 2030 back to 2035, which grabbed a lot of headlines in the UK and probably created a degree of uncertainty around what that means for the transition. But I think what didn't grab so many headlines is the fact we have a regulatory framework that sits behind that called the Zero Emission Vehicle Mandate, or the ZEV mandate. And what that essentially means is manufacturers have to commit to a certain percentage of their vehicles being a electric vehicle as part of their sales. So that starts with 22% of the cars they sell in 2024 must be electric, and by the time we get to 2030, they must be 80%. And for every car that is sold outside of that allowance, there's a £15,000 fine that you have to pay to the government. And what that kind of says to me is that whilst on one hand the government is saying they're delaying that ban, in actual fact the regulatory framework means we'll probably be very close to full electric sales by the time we get to 2030 anyway. And a number of the manufacturers have come out since that announcement to say their commitment remains, and they plan to be fully electric way before that 2030 deadline anyway. So in reality, we're probably going to see a continuation towards that adoption rate, regardless of the pushback in theory to 2035. I've also noticed that in previous sessions, and it's been touched on again here today, that there's a lot of focus on a movement away from ownership model to usership models. So whether that's leasing, whether that's subscription, whether that's salary sacrifice. And again, we're seeing that in the UK. So over half of new car sales in the UK currently go into the commercial fleet business market. And when you look at electric vehicles, that number actually increases to 64%. And we can see that we expect that to continue, as it's certainly in the short term here in the UK. So what I'll go on to now is some specific areas of interest. So around insurance. So from an insurance perspective, how do EVs look different? So as many people will be aware, insurance is based on looking at the past to predict the outcome of the future, and then we take appropriate pricing and underwriting actions to support drivers in a profitable way. So with the transition to electrified mobility still at an early stage, we don't have the same ability to rely on the past and tell us what's going to happen in the next 5 to 10 years. So we're having to think a bit differently about how we predict what could happen. With ICE vehicles, we know, because we've got a blended mix, both in terms of the age and the cost, what that means for us as an insurer. However, with most EVs being new cars, and the fact that as things stand, a lot of the manufacturers are focused on the prestige, SUV, higher end of the market. We don't have that same blend, and there's a push that a lot of the EV cars that we insure are higher in cost because of that's what's available in the market. Clearly, we know that more affordable EVs at the lower end are coming, predominantly maybe through things like the MG4, and then there's a variety of lower cost vehicles en route from Chinese manufacturers. But right now, the cost of those EV vehicles is probably higher. And even if you look on an equivalent basis for the same model, an EV is more expensive than an ICE vehicle. We also have to face into the fact that there are a whole new range of OEMs that we've never seen before, have no experience of, which is great for customers as it's providing more choice, more innovation. But for us, we don't have that same experience of those manufacturers. And likewise, we don't have experience of the cars that they're providing in terms of the technology, in terms of how people will drive them, how easy it is to repair them, the availability of parts, etc. So again, we're having to adapt to more new manufacturers coming to market now than we've probably seen in the previous 100 years. So that's adding a new layer of complexity that we've not had to deal with probably before. And as I mentioned, a lot of those cars are bringing new technology. So we've got radar, LiDAR, adaptive cruise control, adaptive braking, we've got lane assist, we've got battery technology. We've moved away from the days of a bumper being just some plastic on the front of onto a vehicle. That's now got sensors in it, it's got cameras, it might have a charging point on the front of it. There's a whole new range of technology that we're having to understand. And obviously that technology comes with a cost. So, as Stefan mentioned earlier, with BMW, they might choose to provide cars with a load of the kit and technology on the vehicles now, whereas in previous times, you as the customer would select what technology and kit you wanted on the car up front. So that car now looks different to a standard manufactured version. Whereas now, the chances are, those cars will all look the same, have all that kit on, but the customer's going to choose which and when they use that technology, which is a very different world to where we've been used to. We've got a totally new way of driving. So we're moving from a traditional ICE way of driving to a one pedal version of driving. And with that, you have faster acceleration. So how will customers adapt to the transition from a family car with, a sort of standard acceleration into an EV, which may look and feel the same to that customer, but actually they're getting supercar acceleration versus what they're used to. You then have regenerative braking, where the car is making braking decisions for you, which could potentially help with preventing accidents. And we've got things like charge anxiety, range anxiety. So the fact that customers in an ICE vehicle, they probably know where their nearest petrol station is. So very rarely will they have that nervousness, except, as Chris highlighted in Australia, where even in an ICE vehicle, the distance traveled could be tricky. But for most UK drivers, they know where the local petrol station is. And even if they're in somewhere they're not used to being, they know there's a petrol station around the corner. They don't have that same confidence right now in EV charging. So will they drive more conservatively? Will they be more conscious about how they're driving whilst they get used to the fact that they've got to adapt to charging rather than refueling? EVs will tend to be heavier than our ICE equivalents as things stand. And there's, again, pros and cons for that. The positive is that because generally the batteries are in the foot of the vehicle, that changes the center of gravity for the vehicle and potentially means it's less likely to roll in an accident, which is a good thing. Offset against that is the fact that if the car is involved in an accident, that heavier weight means there's more momentum going into that accident, and that could amplify any damage that's caused as part of to a vehicle or individual that's involved in that accident. Again, just things that we're trying to get used to. And finally, as I kind of started with, we have, as a company, over 25 years of experience of insuring ICE vehicles. We have lots and lots of data, lots of visibility of how that works. In EV, we have a tiny, tiny sliver of that equivalent information. We're in a good position. We've been insuring EV since the Nissan Leaf arrived on UK roads over 10 years ago, and we're UK's partner for Tesla from an insurance perspective. However, there is still a long way to go for insurers to have the same confidence in EV data as we do in ICE data, as you'd expect. Another trend and potential innovation that could help insurers is connected car data. So one of the things we're having to adapt to is over-the-air updates. So traditionally, as an insurer, I insure your car on the 1st of January. And when I send you your renewal notice on the end of November, I'm sending you a renewal notice for exactly the same vehicle. Nothing has changed in the metal. The fact we now have over-the-air updates, and last year Tesla confirmed that they did over 80 of these updates, means that the vehicle is constantly changing. And historically, where we could look at one vehicle and say, yeah, all of those vehicles are the same, so we could rate them the same, they're going to behave the same. We could now have, if I insured 100 Model 3s, they could all be slightly or dramatically different to each other, even though they may have rolled off the factory line looking exactly the same. And they're going to constantly evolve. So that's a new challenge and opportunity that we need to understand. We need to, I guess, be aware of what's coming in those updates. When are they coming? Which customers are selecting those updates? And of those updates, which are the features and benefits that the customers are selecting? Because again, they could be different vehicle to vehicle, driver to driver. Connected car data could, again, provide a whole load of new insight to us, which can improve the visibility of driving behavior, the condition of the vehicle, and the performance of the safety technology that's increasingly being added to the vehicles. And it could potentially be the platform to really see telematics become a mainstream insurance product. To date, in the UK, it's probably been around 5%, 6% of the market, because for a lot of customers, it's a grudge purchase on top of a grudge purchase, because the proposition leads with telematics as the thing, rather than telematics being the enabler for the proposition. With connected car services, we're seeing manufacturers, and Stefan alluded to this in his presentation, that connected car services, that interaction, cars will increasingly become sort of computers on wheels, and we'd anticipate the customers' interactions with their car will start to be similar to their mobile phone, and therefore there's probably more willingness to share data with their vehicle, with a manufacturer, with an insurer, than there probably has been in the past. And that will allow insurers to create new propositions to leverage that data and potentially move more customers towards a usage-based telematics driving product, whether that's how you drive or when you drive. One bit we certainly think could change with connected car data is the first notification of loss. At the moment, and historically, if you've been involved in an accident, you get out of the car, you exchange details with the other party, you maybe take some photos of the damage, you have to send that off to your insurer. However, we're probably not that far away in the future from that car that's involved in that accident being able to notify the insurer straight away, provide confirmation through the video cameras that are attached to the vehicle of what's happened, probably using AI in the background to assess that video footage to say, okay, your driver's at fault, or the other person is at fault. The car sensors tell you what parts have been damaged on the vehicle. They then notify you, the insurer, the best garage that's there to fix that vehicle, what parts are needed, order the parts, arrange to hire a car, or if the car in fact is a write-off, potentially generating a settlement figure and firing it off to the customer without the customer having to do anything, and potentially before the customer's even left the vehicle. So there's a lot of potential in connected car data to really improve that first notification loss, simplify it for the customer, make it a much easier, less stressful journey, and help insurers manage the process, the efficiency of the process, and keep costs down. And then finally, battery health insights. So a key difference between EV and ICE, as you'd expect, is the fact we now have a battery. And what that means is that we've got a single part of the vehicle which potentially accounts for a third to half the value of that vehicle. So for an insurer, understanding how that element of the vehicle is managed by the driver, and increasingly what the health of that battery was prior to and post an accident is going to become increasingly important. And that kind of leads me on to my next slide, which is the race to kind of EV repairability readiness. We at Direct Line Group, we're in a strong position around repairability because we have Direct Line Auto Services business within our group, which contains over 22 repair centres, meaning we've got real world experience of the differences between repairing an EV and an ICE vehicle. To support the transition, we're training engineers up to the highest EV qualification available via Thatcham, which is a company here in the UK which supports research and training for repair networks. And we're ensuring that all of our engineers are trained up to the highest EV qualification so that we're ready to manage those EV repairs coming through from our, say, nearly 4 million customers. And I touched upon battery health on the previous slide, but this is really one of the key areas for an insurer when you think about repairability, because it's increased complexity, it's increasing the cost, and as I talked about, there's a single point of write-off in the vehicle that we probably don't have in the same way as an ICE vehicle, which we're having to factor in. And ideally, we need to know the battery health prior to and post the accident, so we can assess how we flow that claim and repair through our processes. For example, if we could see the battery was 90% health before an incident and it's only 5% after, then we're probably going to move that into a write-off process rather than pushing it into a standardized process where we take the car in, we assess it, which takes time, effort, resource, only to come to the conclusion that, you know, the battery is damaged to a point where that vehicle is a write-off. Likewise, if we can see the battery health hasn't dropped at all, then we would move it into a standard process, deal with that maybe as a cosmetic repair, and that would be a very different process. And there's a great report from Thatcham, I could put a link in the chat after I've finished, which looks specifically at the impact of EV repair on the whole repair network. So I really recommend, if you're interested in it, check that out, because it goes into a lot more detail than obviously I will be able to here. And we need that battery health indication to be at cell level, not just the whole battery, because we know that there's an afterlife economy for batteries, again, that we're needed to think about. The battery then leads on to another aspect that we need to think about differently, which, and not just us, but any repair network, which is quarantine space. So at the moment, you know, an ICE car, you just park your ICE cars in the car park while you wait to repair. We know from guidance from manufacturers that we need to leave a certain amount of space around EVs to protect against thermal runaway risk. That means that repairers are going to need potentially more space than they've got today. And our smaller networks were really prepared for that. Do they have the money to invest in that space? Is that space even available? Salvage. So, you know, again, we have a traditional salvage process that is also starting to learn to adapt with what that means from an EV perspective, the fact that you have battery parts, etc., residual value impacts. So we need that salvage process to catch up. Otherwise, if that process takes longer, there's a cash flow impact. It takes longer for us to get the money in to then set off against the claim. So again, there's another process that sits off the back, which is set up for ICE vehicles, but needs to evolve to support EVs. Same as battery recycling. So we have an asset there. So even if the battery is damaged, we know there's an afterlife for that. How do we make sure that in the UK we've got sufficient battery recycling opportunities? And how do we as an insurer and a repairer within an insurer make the most of that recycling value to then keep costs down from a repair perspective and then be able to pass those back to the customer? And then finally, supply chain. So with so many new manufacturers, so many new models, having transparency around that supply chain, being able to have confidence that if a car is damaged, needs repair, that those supplies of parts are available to us in a quick and efficient manner is really important. You know, we found through COVID, the supply chains were delayed for obvious reasons. And what that means is that we then have a car sat in in a garage waiting to be repaired for a significantly longer time, which means we've got a customer sat in a hire car for a considerably longer time, and therefore that's just attracted more cost, and eventually that will have to be passed on to the customer. So in summary, we're working in a really exciting, fast-changing sector, which is beginning to move from early adopter to mass adoption. This is going to bring both opportunities and challenges for insurers, just as it is for manufacturers, charge point operators. But we believe we're well placed at Direct Line Group to play a key supporting role for UK drivers as they make that transition to EV. Thanks for listening, and yeah, happy to take questions either now, or if people want to get in contact, then yeah, feel free to do so.
Thank you so much, Stephen. Wonderful insights. I think, very extensive on exactly, what are the opportunities, challenges, and everything what you face in the industry, from insurance perspective. We'll have Direct Line Group, once again, joining us as well, for the next session in November, which will be, focusing as well about insurance and the partnership opportunities it brings. So if there are, any questions from the audience, I really, advise to write them in the chat or, reach out directly to Stephen. Post session, we can connect you. Happy, probably to create, further connections. So just to sum it up, today, we obviously, as I mentioned, in the community are trying always to bring in new exciting topics, new exciting speakers, and we'll continue on the insurance focus with the next event on 29 November. We are sending as well calendar blocker in advance, to all the people that are active inside the community. We have engaged already more than 300 individuals through these sessions, starting from May. And it's, almost more than 100 different financial services or other institution connected with mobility topic. Exciting, to have all the insights, today coming from the banking industry, from insurance industry, from a fintech, combination of the software supplier, but as well, from one of the major player in the mobility ecosystem from BMW Group. So that's I think, it of what we are bringing ahead. To join and to know more about what's happening inside community, that is just, one click away. The community is, for the moment, open to anyone. We are not, right now limiting access. You can actually join, see, all the insights, because together with our copywriter are always bringing you the spotlight and the key findings from each and every online session. We build this community together with our key partner, CVA. So if you have further questions, if you don't know where to tap, how to do it, please reach out to Marcus or Amelia. They are fantastic, people who can help you out with everything what they offer as a solution. So before we call it a day, thank you so much, to all the speakers, to Stefan, to Stephen, to Chris, and as well to Kevin. Wonderful, fantastic, insights on the EV topic. Marcus, thank you so much, for your support and the whole CVA, without whom we won't be able actually to put this fantastic section together.
Thanks a lot, everyone.
Any final comments from anyone? Good, fantastic. Thank you so much. Have a wonderful day and enjoy.
Thanks all. Take care.
Thanks a lot.
Thanks all.
Bye.
Bye-bye.
Thank you. Cheers. See you.